All right. Microphones are hot. We're good.
We're good.
All right. What's the ticker say? 1242 on that.
Nobody's calling in today.
42. No, they might. Who knows? There's a lot of people off work. They're doing their thing. I don't know. Thursday. Going to the beach. Come on now. So, all right. Good to see everybody. Here we go.
Ready?
Yeah, we're ready. Okay.
3, 2, and 1.
Hey, folks, welcome back to your Frederick Real Estate Update. I am Darren Aho with RE/MAX Results, bringing you almost 22 years experience in the Maryland and PA and other regions. And I also have with me, as always, the man, the myth, the legend from Presidential Bank Mortgage, Mr.
Terry Kernan.
We also have with us special guest. He is
Very
back
special.
in the hot seat, the man, the myth, the legend, also of the appraisal world. Who we got here today?
Kenny McClain. I don't have quite the 22 years experience. I'm going on 19 right now.
19. You're catching
19.
us. You're coming up from the back. You're coming fast, man. You're on this more than we are in a lot of cases. I'll tell you that, especially when it comes to values. And we're going to talk about market conditions, values, all kinds of fun stuff that's out there that we know that you guys as our listeners have asked about, that I've experienced, Terry's experienced, and all that. So, Terry, you're going to get to start us off today. Mortgage stuff. What's happening out there?
So good news has kind of come into the market, and that is that the sign of inflation, as I always say on the show, fear breeds fear, anxiety breeds anxiety, anger breeds anger, enthusiasm breeds enthusiasm. What we've seen is we saw a lot of fear in the market when all the tariffs and all the tariff talks and everything was going in, and everybody said, inflation is going to go through the roof again. Just wait and see. Well, we waited. We saw what happened. Inflation ticked up 0.1% in May. Okay. It didn't tick up in April. So basically, a lot of the fear, but they're saying, well, the tariffs haven't kicked in yet, or they haven't. The bottom line here is that the inflation seems to be under control. Now, the Fed's probably not going to cut rates. I said that they would cut them in July. They're going to meet next week. Probably won't be till August. But I think that they're going to have to cut rates. There's room to cut rates, okay? They have to realize, or we have to realize, that when they cut the rates, they're cutting the rates on the prime lending rate. The effect of that cut really doesn't show up for 6-7 months down the road.
Right.
So my feeling is that they have to cut the rates now. And you say, well, why? They don't know about inflation. Because things are starting to slow down in the economy. The GDP, which nobody's really talking about, is slowing down. We had a negative last quarter. So what does that mean? 2 in a row, we're actually in a recession. So I feel that they need to cut rates now to get ahead of the recession talk, get ahead of the recession numbers, get ahead of the recession, because whatever they do today is going to take about 6 months to show. So that's what I'm saying. So whether anybody else believes that or not, but that's what I feel, is that it's not so much controlling inflation right now, it's staying ahead of a recession.
All righty. There you go. There you go. All right, we're going to get to it. Kenny McClain is here. He's not new to the program. He's been with us a number of times, and we appreciate you coming back on to give us the mid-year, daily, weekly, mid-year doses now of real estate and what your thoughts are, what you're seeing out there. So, all right, tell everybody about yourself.
I'm Kenny McClain, owner of 6 McClain & Associates here in Frederick. We do appraisals around the Frederick County area, Carroll County, Upper Montgomery County, some Howard County work, and Washington County.
All right. And you've been doing this how long now?
19 years, not quite as long as you guys.
But you've been in this game a long time. You're not new to this sport.
Well, this Sunday, I'll be 26-year anniversary at Presidential.
Nice. Congratulations. They're lucky to have you.
I mean, you're 39, but of the mortgage business, but 26 years. Can't believe it.
That's
Good,
awesome. All right. Let's the biggest question. You know what it is, Terry? We get this all the time as agents and anybody out there that even looks like they do anything with real estate. And that is, how is the market? Kenny, you're going up now. Here we go.
I mean, the market's holding pretty good. I mean, the last couple of weeks we've had 80, 85 on average probably go under contract. Anytime we have a weekly contract, contracts going 50 or more, I know it's going to be a good week and a good month, and we're all going to stay busy. It seems like there's a lot of opportunity out there for the agents, for the lenders, and for the appraisers.
Mm-hmm.
I always tell sellers, as long as you're priced right as a seller, it's great. And for buyers, as long as you got money, it's great. If those two things are lacking a little bit and expectations are crazy, then you're not going to like this too much. So, all right, you had mentioned to me, Kenny, when we had talked before about, how busy you are, like, what are you working on? What's happening? What are you seeing? You mentioned to me not too long ago that you're doing a lot of divorce work. What in the world does that mean?
Well, I mean, most people think appraisers do refi purchases. That's
Right.
not the case in a lot of. There's a lot of other circumstances people might need an appraisal. IRS, gifting, divorce work is one of the big ones right now. Estate work is one of the big ones as well. So there's other things that we do just other than the lender work for the refis and the purchases.
Yeah, and that's a key thing. There's so many components and elements outside of just a traditional sale and purchase that you guys are called in, and need your expertise.
And we are. And I want to make sure that everybody understands we're not an advocate when we're doing divorce work. For one side or the other. We're
Right.
out. We're out just to give that opinion of market value, as if that house were to put a sign outside the next day.
Yeah, you're just doing factual data. Here's what's changed. Here's what you need to get. Here you go. This is the numbers. This is the stuff. So
Can I back you up and ask one question? You
Yeah.
said IRS gift.
Oh, a lot of people were. We've done a couple this year where somebody's just giving their property to
The whole property.
the whole property to.
So it's not a gift of equity. It's actually giving the
they're
whole
giving the
gift.
whole property so they can write it off on their taxes. Whether it be an interfamily transaction. One case, somebody gave their apartment building to the Salvation Army.
Wow.
And
Really?
yes, very recently.
Oh,
So they want to know what they can file on their tax returns as the value of that property the day they gifted it.
that's interesting.
Yeah, and for it
That's-
to be
yeah.
like legal, if you will, or in the eyes of the powers that be, it has to come from you as a professionally licensed appraiser, right?
I guess they don't want somebody overinflating or underinflating, depending on the circumstances of that situation.
Yeah, we don't get calls for that. I can tell you that. So, all right. So that's it. The market a little bit, and some of the things that are standing out that you're working on and all that. Price growth. This is a big thing, and I asked you to do because I've gotten so many times I've gotten asked about this. Is like the appreciation in the United States. What's been going on? And I shared that a little bit in the past. Terry and I, we did a program and some things on. It's fun. And then in our Frederick area, and most people want to know what's really happening here. And I'd asked you since 2013. How much have values each individual year gone up in Frederick County as an average whole? And then what's happened up until COVID, what's happened after COVID, and then going back to the United States. So I'm going to pull out my neat little chart. But before we do that, Kenny, we got to know this. Last week was a big milestone. Terry, how many homes do we have for sale in the market? 500 and how many? 17.
17.
We broke the 500 mark. And when's the last time that happened?
First time since I think it was July 2020. I did that same stat this morning.
And that's something.
524 as of 10 minutes ago.
There you go. So so
524.
if you look back consistently, we are gaining more and more inventory little by little by little. Kenny, why do you think that is?
I think that people are ready to get back in the market, and prices aren't going up. I'm sorry, prices aren't going up anymore, like they were before. I mean, we've had some increases this year, but not that steady increase we saw in 2020, 21, and 22.
Yeah, that was crazy. I don't know if we'll ever see that again, but who knows?
Well, I had a call with a borrower yesterday, and she said, well, I'm not buying until next April. My lease is up May 1st. Or April 1st. And I said, well, you may want to consider now's a pretty good time because inventory is more. Take a look at what it takes to get out of that lease. Okay. People, when they say my lease isn't up until April, a lot of times there's a shortage in rentals as well as purchases that you can actually take a look at getting out of your lease, and they'll let you out with a 60-day notice a lot of times.
Yeah, there's still a vacancy rate of less than a month for rentals right now,
Yeah.
so they're still in demand.
So now is a good time to buy.
Big time. All right, we're going to get into these U.S. facts. So we know, Kenny, that from 2007, 8, 9, 10, 11, and all that was ugly. The big financial meltdown in our area. Across the country, it was like 25 to 35% or more, depending on where you lived. In our area, it was roughly, I think, how much would you say in those 5 years, we lost how much in value from 07, 8, 9, 10,
Oh
and
boy,
11.
I didn't go back that far, but we lost. I'd say we lost at least 30% in that time
That
frame,
was it.
and it'll kind of be reflective of what we gained back in the COVID. I would say 2020 and beyond.
Yep. So that's where we're going to pick it up. We saw in 2012, that was like a split market. We were coming out of things a little bit just for the first time in a long time. It felt like we're getting values back. It's starting to come back. 2013, that's where I'd asked you to start with in the United States. 10.6%, so double digits. We came out swinging. Now that when I first saw the number, I thought I think that's a little bit high from what I remember, but
It's actually high for Frederick County because 2013 and 2014 we actually gained nothing.
that's what I mean.
And we
Tell
started.
everybody what happened.
2013 is a great place to start
Yep.
because it was a flat market.
Mm-hmm.
2013, 2014, 2015, 2016 even, and we only went from an average sales price of 289 to 301 over those 4-year period. Then 2017 to right before COVID was where the market started to gain momentum again. Over that time frame of that flat period to 2019 pre-COVID, we saw an average sales price of 21% and a 23% median at that time. And then we all know what happened when COVID hit. Thought the world was going to fall, but the real estate market went nuts.
Which is still amazing.
It's still fascinating because I was
incredible.
didn't know which direction to turn my head once they announced go home and don't come back.
Yeah.
So for after COVID, we've seen an increase to today of 39% on average and 34% on median in prices since COVID. And that's actually dropped. We're actually a little lower right now than we were all of 2024.
So is that since March 16th, 2020, when they said
Since
everybody go home?
Pretty much. I did it since
March
Jan 1, but to get the whole year because we had a pretty, June was a little slow. Nobody knew what to do, but boy, September, October, November, everything went crazy that year.
Yeah.
That's amazing. 39%.
So that is pretty wild. Like you said, I remember 2013, 14, 15, it was like almost no traction. It was like you're spinning wheels and there was things like, trying to pick up and get going. But in the United States, it looked like it was like 4.4% in 2014, 5% in 2015, 5.2. And then you had said about 2017, 16, 17 is when.
That's when Frederick County really started to gain momentum. We did not in Frederick County go up, oddly enough, like the U.S. home prices did.
Right. Yeah. And we're in a good area. And so it was very minimal at best. And then all of a sudden, so in 2019, this is when right before COVID, it was actually down across the United States, 3.8%. And do you have in 2019, how much did Frederick County go up that year?
We went up, we were at 339 roughly, and we went up to an average sales price of 349. So not a huge increase. Very minimal. I mean, math wise, it's at 3%. It's not a lot.
Yeah. Yeah. So the big hit, COVID 2020, the United States, 10.6%. And then in our area, it was about how much that we had gone up for 2020 in Frederick County.
From 2020 till now?
No. In the year 2020, that was when things just started to get going. Do you have any idea?
Well, we had an average sales price of $380 for the whole year of 2020, and it went to $438. Let's just call it $439.
That's the key. We went from 380 to 439. 1 year, we went up that much, which is a really significant value.
And then look where interest rates took us in that 22, 23. The big increases were 20 to 22. That's where the big increase was. And that was a pretty flat market from 22 to 23. And now people have kind of woken up, and Terry would probably agree with this. People are realizing that you still got to buy and sell. Yep. So they're coming out, and people are doing normal real estate business again. I think we're back to a more seasonal market than we were. Tired of using the word COVID all the time. Yeah. So I think we're really back to a good seasonal real estate market.
Yep. 2024 last year was really interesting because across the U.S. it was 2.9, and in our area I think we were pretty much, from what I remembered, we were matching. We were up a little bit, just a tiny bit better than the average area. And then this year is interesting. I know that Zillow and Realtor.com and all them we've talked about, and how they actually, for the first time a week or two ago, downgraded their next predictions of this next year. And they were saying that we were going to be up a tiny bit. Now they're saying about a little bit close to 1% that values across the United States will go down. So what are the numbers this year so far?
They're expecting an overall negative this year. Which would be the first time that we've had any negatives since 2011, according to some of these graphs and charts and things. So we've had dips. That's what I wanted you to explain to everybody.
we've experienced that as agents. We've experienced 3 and 4 months where it's like, wait a second. And then we've had dips, but then it comes back and then another dip. And it's like a little weird roller coaster ride there. But at the end of the day, what's really going on, and where do you think, what does it look like the end of this year Frederick County could be at values?
That's where we're getting to that seasonal market thing again. Every year we've gone up, and the last 2 years we've gone back down again. So we've peaked in September, August of last year, and we're on the track this year of going up so far. The first 2 months of this year compared to the last 45 days of 2 months of this year so far, we've gone up 4% on average in sales prices. Now, the reason I don't use just January, because January is typically a very slow time.
Yeah.
So I want to gather that first 2 months of data and then the last 2 months of data. So this year we are up. We are up 4% this year, and 6.5 on median, which is kind of odd because the median's higher than the average, which is typically reverse.
So people would ask me, they're saying, well, Darren, you've been saying, and it seems like with data and some things, you've been saying it's been fairly flat, depending on where you're at. There's some areas are up a little bit more, say downtown Frederick or whatever. And that's what I wanted you to address. If right now we're about roughly, as a whole market, about 4% up, what do you see as far as this next? We're coming out of the summer market. Now inventory is continuing to climb. And then, and of course, volume. All of us keep seeing volume, and the number of sales is definitely down from the average. So how does that all mix into what could be coming that you kind of see?
What's probably going to happen this year is it's kind of what's happened the last 3 years.
Okay.
It's just not going to go as high before it levels itself back off. If I had to take a rough guess, we're probably going to end up on a high of 6.5% on average this year, and probably by October, November, depending on what the rates do, we'll probably be back to roughly where we started.
So the question becomes, what price ranges, what range of values, if you had to break it into, like, obviously, and there's nothing under $200,000 hardly, but if you had to break it in like range of values, what's driving, what range of value and what homes or what locations are driving the numbers staying in our area, appreciation of value higher or better and positive than what we're starting to see across the United States, which is like we talked, Florida's down 10 to 20%, a lot of places, Punta Gorda, worst in the country, Dallas, Fort Worth, and other parts of the country in the south. And now in the Northeast, I've heard we started to crack. We're starting to see spots and pockets that's starting to take a little bit of a hit as far as values, and on the downturn, a little bit, not a crash, but just a correction. What areas, what price ranges and all that is making the prices still stay in the positive?
Well, the ideal price range right now is that 300 to 500 price range, which in Frederick County, you're looking at basically a resale townhouse or an older single family house in that price range. That is the active price range. That's where it's got the most inventory. That's where it's got the most sales. I've heard many realtors over the last couple of weeks, especially in that 800 plus price range, I can't sell my house. I can't sell this house. People in that price range,
800 plus,
800 plus, into the millions, into the millions.
But
inventory and inventory 800 to over $1 million has doubled in the since January.
Yeah, you can go over some of the numbers of price things that stick out to you in days on market. What sticks out to you right now? That's
days on market's actually going back down. But that days on market's gone from 30 this year on average, 35 when we started, even a little higher. But right last week, the days on market for everything that went under contract was 23 days.
Yeah.
Everything that sold last week was 21 days. So people are actively out buying. There's no question about that.
Terry,
and they're buying quickly.
Yeah. That's what I've been telling and advising. I have one, Terry knows this, I have one listing in Ballinger Run. That's one of the villas, 3-bedroom, 2-bath, the smaller of the units with no basement. It's got 2 levels. And this is the first time I told the sellers, like on data, the last one had sold just like it was like 463, everything the same. Okay. And so in the last year and a half, it's kind of like, well, there's just a little bit of a time adjustment. What does that look like? And unfortunately, we were a tiny bit high. I kind of knew it. They want to try it, but now we've come back down. We're getting more showings, but we're at like 483. And I said to them, this is the first time in 5 years that I've had a listing that hasn't sold in the first 10 days above asking or at, and we've had to make a correction. And we don't have a lot of competition at all, but except for like a townhouse that's 3 or 4 units with a flat up there, or a larger, the villa that does have the basement. But some of those are going on the contract right now for like 530, and we're at 483. And I'm like, This is crazy. What thoughts?
I'm very familiar with that neighborhood. I just did the one that was listed at 540. The big problem with the house that you have in that neighborhood, it is the smallest model in that neighborhood. Because everything else is 24, 25, 2,600 square feet.
Right.
And they're all selling in the fives.
Yep.
With no basements.
Right. And ours is 2,008 square feet. But it's got first floor level living.
Well, that's ideal for that segment of the market over there, because people do like those villas. Are most of them, other than yours, that's a little smaller on average than the rest, have a lot of room in those. There's a lot of room in those villas. Yeah,
they're gorgeous. They're nice, and they got all the amenities, the pool, and the whole yards. And so, but I told him, I said, hold on, confident. So here's one of the questions, and one of the things I know I'd ask Terry about it with strategy, just on our end, when it comes to the market, is what we decide to do is rather than lower the price, knowing that the price we got to be there. We're getting showings and interest. I mean, it's there, and everything looks good. And so we did the 2-1 buy down. They were willing to say, okay, we're going to go ahead and offer the 2-1 buy down in lieu of coming down any more in price, since we got to be pretty close to see how that strategy works. So from an appraiser point of view, any thoughts how does that play into an appraiser, an appraisal that you see? How do you see those much? And how do they affect an appraisal at all?
We're going to explain what 2-1 buy down.
2-1 buy down, where the seller is paying for the buyer's mortgage to be lower for the first 2 years of the loan.
They're giving them a seller concession mortgage.
Yeah.
Okay.
2.6.
So that shows up on an appraisal as what? A seller concession?
Yes.
It should show up as a seller. Okay.
It's a 2.6.
Yeah, 2.6 is the sale price or the loan price.
Okay.
All right.
That would be a great incentive to buy. I mean, just to go back to your townhouse in Ballinger Run, that you're the only thing under $500,000.
Yeah, we are definitely. And that should be extremely appealing.
It should be at that price point where hopefully you'll get a buyer here.
I think so. It should. All right. Next big thing we talked. Thanks for going over these numbers and stands out. That's awesome. The big one now, how do you make adjustments? This is the thing. Whenever there's like an appraisal issue and no one likes to have that, and it's like the value is not coming in, how do you make, with the process of doing evaluations and how those adjustments can kind of work, and how you go back or if you're ever, called to revisit anything, or how that really works in retrospect to square feet and lot size and bedrooms, bathrooms, all stuff? I find that a lot of the public, they don't study appraisals. Like, they don't know any adjustments and like why. All they know, and we get this, all they know
whether the value was there or not.
Yeah,
it's a good point. Because that's what really people are desired to find out. What's the final value? Did it work out to my benefit?
And if it's not coming in, and I know that's a low percentage overall, not having an appraisal issue, the very first thing they say to us is, how did that happen? And wait a second, my house is better than the neighbors. What the heck's going on? I heard the market's fine. Nothing's crashing. So they don't know what steps are taken to either reevaluate or the steps you do for adjustments, whatever. Can you talk a little into that?
Oh, I certainly can. A big adjustment is square footage adjustment. That is done on a case-by-case basis.
Okay.
And it's done, throughout the process of each report. I can tell you that, a good modest square foot adjustment right now in Frederick County for a lot of properties is around $62 a square foot. As the properties get larger and get into the more expensive price range, into the $800s and $1 million, those adjustments are actually going up. But then when you have these, let's just say these existing townhouse subdivisions in the Ballinger Creek area, that spread of adjustment per square footage is really a lot less than that. So they really do vary on a case by case. And that's where we actually grid them out just to see the spread, the sales price versus the square footage, to figure out with a whole bunch of group sales where those adjustments should be for that house. It's not for every house; it's for the specific house.
Right.
And then a good example of lot adjustments for square footage for sites. There's 2 great sales on Old Frederick Road last year. They both sold within a month of each other, and the only difference was their size. There was a $91,000 per acre difference between those 2 sales. And at the same time, there were 4 land sales in Thornwood Terrace last year in Mount Airy. 3 smaller ones, and then the big leftover lot in the back. The difference between those 3 sales and that big one, price per acre, $9,100, just like the one in Old Frederick Road.
Wow.
So that's what we look for when we're making those adjustments. And that's what we'll use until we can figure out, is the market changing?
So Kenny, you talked about adjustments, and the adjustments basically determine what the value of your house is. when you're
compared
selling.
to a house that's just recently sold. Yes.
And I didn't hear you say upgraded carpeting, upgraded paint, because so many times I'll get a call from a realtor saying, well, they put $100,000 worth of upgrades in it. Can you address a little bit about, if you're not adding square footage?
Oh yeah, those are certainly things that we consider as well. The first two examples were square footage and site adjustments, but condition of the house is a big factor.
Condition is 100%.
Condition is basically interior, exterior, roof, HVAC. Just because somebody maybe renovated their bath, but if their roof is 25 years old and they have a 20-year shingle, people are going to pick that up, especially on a home inspection, because the home inspector is going to be like, well, you're going to have to put $8,000 aside right now because you're going to need a new roof. And a lot of times, if the appraiser catches that the roof is at the end of its life, no matter what the loan is, the lender might not agree. And
yeah, we've done a show on the roofs.
Okay,
if it's over 15 years old, it's going to be tough to.
And that's a whole new insurance thing as well.
That's
yes,
a whole different.
So there's inside and outside conditions that are all factored into our overall analysis, and those are subjective, but they're not biased. They're just you're gathering information of that house versus the house that we're doing the appraisal on.
Correct. But so many people, I've gotten calls over the year saying, well, my buyer or my sellers put in so much extra options and upgrades, and it really falls under it lumps under condition.
It lumps under condition,
it's
but it could be individual if it's one specific item versus go back to the roofs. If every comparable are the same except that one that has an old roof, you should be able to almost see the difference in the value, and you would adjust just specifically for that one item. But generally, it's a lump sum of the group of how good is the house as a whole.
Yep.
Right.
Okay.
One of the big things we get also is when appraisal, and sometimes if people see them, they'll say, wait a minute, this house isn't in my community. That's not in our area. Or why did Kenny or any appraiser, mine has 4 bedrooms. They have a 3-bedroom or a 5-bedroom or this or that or whatever. How do you, with a lack of less, I should say, now that we've had a little bit of a trend of less volume and sales data to grab from, what kind of time frame do you go back? What kind of areas and adjustments as far as that? How do you handle that? Specifically time frame and areas.
The big thing is location. I mean, that's the number one. When I started this 19 years ago,
it hasn't changed.
It hasn't changed. Unfortunately, ideally, we'd love to pull comps from the same neighborhood, but sometimes you just don't have an option, and that's where you broaden your search. You'll broaden your search to other comparable neighborhoods before you start going 5-10 miles out to other areas. If we could just take the north part of the county versus the southeast part of the county, you can just run the zip code and tell that there's an average sales price difference.
Right.
And that's how, if we had to go further, and there's a lot of cases, farms, so forth. I mean, there's a lot of cases where you have to go far to make those adjustments on location.
What are some of the most, you got about 1 minute, some of the most difficult properties to appraise? What are those?
Some of the most difficult properties to appraise. Sometimes it could be a townhouse, but a lot of times, I mean, converted barns. I mean, I've done a few of those in the past. New construction, because like you say, sometimes unfortunately, cost doesn't always equal value when people are buying every option the builder has.
All right, we know, Kenny, you do pre-appraisals before someone sells a house and all kinds of other work and things like that. Let everybody know all your contact information, how they can get a hold of you.
6 McClain and Associates, easy to Google online, I believe, but it's 301-694-5626. We're here to help, and like you said, we do a lot of pre-sale appraisals, and for other reasons, just for the refis and the purchases.
All right, well, thank you so much for coming into your Frederick Real Estate Update, guys. Everybody has heard it here on WFMD. Happy selling and buying this weekend, and we will see you next week. Take care now and have a good one. All right.
Thanks, gentlemen. Hope that went well.
Oh, yeah. Perfect.